Good morning, everyone, and welcome to this month's Facebook Live. Today, I am going to talk about personal allowances. Everyone has a personal allowance, and this is the amount of money a person can make before they need to pay income tax. Each year, HMRC outlines what the tax-free personal allowance is. And for this tax year, the standard personal allowance from the 6th of April 2020 to the 5th of April 2021 is £12,500 for everybody living in England, Wales, and Northern Ireland. That means that each person can earn an income of up to £12,500 before they pay any tax on it. The personal allowance is different for those living in Scotland as they pay Scottish income tax. I will put a link to the page on HMRC about Scottish income tax in the comments. Sometimes your personal allowance can be bigger if you claim marriage allowance or blind person's allowance, or it can even be smaller if your income is over £100,000. You can find out more by going to the link that I am going to put in the comments. Once you have earned more than your personal allowance, you will start to pay income tax. There are 3 rates. Basic rate, which is 20% and charged on income between £12,501 and £50,000. Higher rate, which is 40% and charged on income between £50,000 and £150,000. And additional rate, which is 45% on all income over £150,000. Whether you are self-employed or employed, the personal allowance and tax bands apply to everyone who is earning an income in the UK. It's just worked out differently. In the examples I am going to go through, I have based these on the standard personal allowance of £12,500. The same principle will apply, though, in working out your taxable income if you have a different personal allowance. If you are self-employed and you don't have any other income, your personal allowance will be subtracted off the profit you've made in the business, and you will be taxed on the remaining amount. For example, if at the end of the tax year your business has a profit of £5,000, you wouldn't pay any tax because it's under your personal allowance. If at the end of the tax year your business had a profit of £12,500, again, you wouldn't pay any tax because after subtracting your personal allowance of £12,500, your taxable income would be zero. If at the end of the tax year your business had a profit of £20,000, after subtracting your personal allowance of £12,500, you would be taxed at a rate of 20% on your profit of £7,500. The amount of tax you need to pay would be worked out at the end of the tax year when you submit your self-assessment tax return. If you are an employee of a business, HMRC will issue you with a tax code that says what your personal allowance is. The standard tax code for the 2020-2021 tax year is 1250L. And this tells the employer that your personal allowance for the year is £12,500, and any income over that amount needs to be taxed. For example, if you were on a salary of £10,000 a year, you wouldn't pay any income tax because it is under your personal allowance. If you were on a salary of £15,000 a year, you would pay income tax at a rate of 20% on the £2,500 that would be left after taking your personal allowance into consideration. The amount of tax you pay will be worked out over the course of the year and taken each time you are paid by your employer. At the start of each new tax year, everyone's tax codes are adjusted to reflect the new personal allowance rates for that tax year. There are other factors that can affect the amount of tax you pay, and you can find out more about these on the HMRC website. These include things like pension income, benefits in kind if you're an employee, interest on savings, income from shares, rental income, or income from a trust. If you have any questions about personal allowances, feel free to message me or put your questions in the comments. I hope everyone has a wonderful weekend, and don't forget to join me for my next Facebook Live in September.